How do you discover small cap ideas? What are your primary sources of research?
Bottom up stock picking is at the core of our small cap investing process. We look at the AMFI, categorize small cap universe, and then put our filters such as return on capital above 15%, revenue growth of above 15%, low debt, and significant free cash flows. After this, whatever we get, we look at the ground feedback, we look at meeting the companies directly. We try and also do meetings with sectoral experts and do channel checks with suppliers and distributors.
How many companies do you track actively in the small cap universe, and what does the research process look like?
Given the practical limitations and the logistical limitations that we have, we cover about 120 to 150 companies actively. However, since peer analysis is a very core important requirement while we choose our active set, we would end up having soft coverage of on another 180 to 200 companies. The active coverage would really mean meeting the companies from time to time, preferably quarterly, and having financial projections for each of them. Peer group analysis is performed while using sell side intelligence or with consensus numbers.
Given that the small cap universe is not well researched as the large cap universe, or to an extent the mid cap universe, how do you differentiate between a small cap stock with a genuine growth potential versus one that is cheap?
The information availability is improving every year, and the research gap for small caps versus the large caps also closing in dramatically. But just too much research doesn't mean great quality research. So it's very important to be disciplined. For us, genuine growth is determined by expanding addressable markets, strong top line growth, improving margins with healthy cash flows, and a management which has a track record of healthy corporate governance and a demonstrated execution capability. In our opinion, this is what builds a durable earning story. We also spend a lot of time on management intent, trying to understand how they think about the business. We try to also answer the question that is the promoter really having the skin in the game? Is he reinvesting? Or are they extracting the value out of the business? That is the crux for us when we look at small caps.
We notice that James Small Cap Fund has no allocation to large caps. It is completely invested between mid caps and small caps. Why is that so?
The JM Small Cap Fund has been deliberately maintained as a pure small and mid cap play in the true spirit of the mandate. This is done to maintain the risk reward profile of the scheme by stock selection and rather than cap selection. For long term investors, the clarity of mandate really reduces the risk across market cycles. We believe that the small cap segment, with its new age businesses and the sheer diversity of businesses that are available, offers rich hunting ground for high potential, high growth companies with quality managements. Our research process itself with the experienced research team enables us to pick under researched names with very high conviction. Mid caps also offer high growth profile with relatively more stability to the portfolio as they may be less exposed to uncertainties and internally as well as from the business environment. Our positioning, hence, is consistent with our fund house philosophy of maintaining high growth, high quality portfolios, which are true to label. We focus on new ideas constantly in this scheme to avoid stagnation and a long term drift.
How do you manage liquidity at your end? How much of a concern is liquidity for us given the size of the scheme?
Liquidity is core to our risk management process, not just in this scheme but across all our schemes. We consider scheme liquidity to be comfortable primarily because of the size and primarily because of the fact that we focus on liquidity and volatility of the stocks while we construct and manage the portfolio on a continuous basis. That said, size of the scheme is an advantage, but the fact is that our risk management processes ensure that we track our liquidity profile in the most stringent matter, in the most stringent manner all the time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.